What if the world wakes up one morning and the US dollar is no longer the world's king? Behind closed doors, BRICS nations are building a financial weapon that could cut the dollar out of global trade. And if this silent move succeeds, it won't just shake America, it could freeze the entire world economy. In 2026, a silent financial war is unfolding. No tanks, no missiles, just currencies, trade routes, and a battle for control of the world's money. Welcome to financial power history, where money becomes a weapon, economies decide empires, and the hidden wars of power shape our future for decades. The United States has ruled the world not just with its military, but with its money. The US dollar is not just a currency, it is a weapon, a silent one, more powerful than tanks, more effective than missiles. Every time a country trades oil, gas, food, or technology, the dollar stands in the middle. Every major bank, every shipping company, every government treasury depends on it. This gives America a unique power, the ability to control who can trade, who can grow, and who can survive economically. When the US places sanctions on a nation, it doesn't need to fire a single bullet. By cutting that country off from the dollar system, it can freeze bank accounts, block imports, crash currencies, and paralyze entire economies. We saw this with Iran. We saw it with Russia. We saw it with dozens of nations that suddenly found themselves locked out of the global financial system. This is how modern wars are fought. The dollar's dominance is built on one simple reality. Almost everything the world buys and sells is priced in dollars. Oil, dollars, wheat, dollars, microchips, dollars, shipping, insurance, international loans, global debt, all tied to the same currency. This forces every country to hold massive dollar reserves just to function. And as long as they need dollars, America remains the center of the global economic universe. But here is the danger. Power always creates resistance. The more Washington uses the dollar as a weapon, the more the rest of the world searches for a shield. And now, for the first time since World War II, a serious alternative is quietly taking shape. A group of nations that control vast energy reserves, massive populations, and critical trade routes are preparing to challenge the dollar's throne, not with armies, not with warships, but with a financial system designed to bypass America completely. This is no longer theory. This is no longer future speculation. The foundations of a parallel monetary world are already being built. Trade agreements, payment systems, gold reserves, digital currencies, and new settlement mechanisms that do not need the US dollar at all. And at the center of this shift stands one alliance, BRICS. What they are attempting could slowly suffocate the dollar's global demand, and once that demand weakens, America's greatest source of power begins to fade. The question is no longer if the dollar will be challenged. The question is how fast and how hard the choke will tighten. BRICS is not just a political group, it is an economic alliance with one clear long-term objective: to break the world's dependence on the US dollar. Brazil, Russia, India, China, South Africa, and now new members and partners from the Middle East, Africa, and Latin America. Together, they represent more than 40% of the world's population, a massive share of global energy, food, and raw materials, and some of the most important trade routes on Earth. For years, these countries watched how the United States used the dollar as a weapon, how access to the SWIFT system could be cut, how reserves could be frozen, how entire economies could be isolated with one signature from Washington. And they reached a dangerous conclusion. As long as the dollar rules global trade, no nation is truly sovereign. So BRICS began building an alternative, piece by piece, quietly, patiently. First, trade in local currencies. China and Russia stopped using dollars for energy deals. Oil and gas began to be priced in yuan and rubles. India started paying for Russian oil in rupees and dirhams. Bilateral trade agreements multiplied, each one reducing the need for the dollar. Second, a parallel payment system. While the West controls SWIFT, China expanded its own network. SIPs, Russia developed SPFS. These systems allow banks to settle transactions without touching the US-controlled financial arteries. Third, gold and reserves. Central banks inside the BRICS bloc began stockpiling gold at historic levels, not paper assets, not U.S. Treasury bonds, but physical gold, a neutral reserve, outside American control. Why? Because gold does not depend on Washington. It cannot be sanctioned. It cannot be frozen by a political decision. Fourth, the long-term vision, a shared settlement currency, not necessarily a single paper currency, but a unit of account, backed by commodities, oil, gas, metals, food, and gold. A system where trade is settled in value, not in dollars. If this system matures, something historic happens. Countries that sell oil will no longer need to recycle their earnings into U.S. debt. Central banks will no longer need to hold trillions in dollar reserves. Global trade will no longer pass automatically through New York and Washington. And that is where the real threat lies. The dollar's power does not come from trust alone. It comes from necessity. Remove the necessity, and the foundation of American financial dominance begins to crack. BRICS is not trying to destroy the dollar overnight. They are doing something far more dangerous. They are making the world slowly learn how to live without it. Every empire in history has had a weak point, not on the battlefield, but in its supply lines. For the United States, that weak point is not oil, not technology, not even military power. It is demand for the dollar. As long as the world needs dollars to buy energy, food, and raw materials, America can print money, fund deficits, and project power without immediate collapse. The entire system survives on one condition: that global trade continues to flow through the dollar. This is the choke point BRICS is targeting, because the moment countries stop needing dollars for trade, they stop needing to hold dollars as reserves, and when reserves are no longer needed, the world's appetite for U.S. debt begins to fall. That is where the real danger begins. Today, foreign governments and central banks hold trillions of dollars in U.S. Treasury bonds. This is what finances America's budget deficits, its military, its social programs, and its global presence. The dollar is recycled back into the U.S. system, keeping interest rates low and the economy afloat. But imagine a slow shift: more oil traded in yuan, more commodities priced in local currencies, more bilateral deals settled outside the dollar system. Step by step, the world's demand for dollars weakens. At first, nothing dramatic happens. Markets remain calm, headlines stay quiet, but underneath, pressure builds. Less demand for dollars means a weaker currency. A weaker currency means higher inflation. Higher inflation forces higher interest rates. Higher interest rates make debt more expensive. And America is the most indebted nation in human history. This is the financial noose. Not a sudden crash, not a dramatic collapse, but a tightening cycle where borrowing becomes harder, printing money becomes riskier, and maintaining global dominance becomes increasingly costly. At the same time, the U.S. loses its most powerful weapon, the ability to sanction and isolate. If major economies can trade outside the dollar system, sanctions lose their bite. Freezing reserves becomes ineffective. Financial pressure stops working. The world becomes ungovernable by one currency. This is what makes the BRICS strategy so dangerous. They are not attacking the dollar directly. They are draining its relevance, like cutting off oxygen instead of firing a bullet. And history is clear on one thing: empires do not fall when they are attacked from the outside. They fall when the systems that feed their power begin to fail. The choke is not visible yet, but it is tightening. If the BRICS strategy continues on its current path, 2026 could mark a turning point in the global financial order. Not a sudden collapse, not a dramatic overnight crash, but a moment when the balance of power quietly shifts. By then, more trade corridors may be operating outside the dollar. Energy deals in Asia, the Middle East, and parts of Africa could increasingly be settled in non-dollar currencies. Regional payment systems may be fully integrated, allowing banks to bypass Western financial networks entirely. To the average person, markets may still look normal: stock indexes moving, currencies trading, news cycles focused on elections and conflicts. But beneath the surface, the structure that has supported American dominance since 1945 would be under strain. A gradual, Fall in global dollar demand would begin to show its effects at home. The U.S. government would find it harder to finance its massive deficits. Foreign buyers of U.S. Treasury bonds would demand higher yields or look elsewhere. Interest rates would remain elevated, not as a policy choice, but as a necessity. This would ripple through the entire economy. Higher rates mean higher borrowing costs for businesses, higher mortgage rates for households, slower growth, greater pressure on financial markets. At the same time, a weaker dollar would push up the price of imports, energy, electronics, food, industrial components. Inflation would become more difficult to control, not because of domestic policy mistakes, but because the currency itself would be losing its privileged position. On the global stage, the consequences would be even more profound. Sanctions would lose their deterrent power. Countries targeted by Washington would have alternative trade and payment channels. The political leverage that once came from controlling the world's reserve currency would slowly erode. Alliances would adjust. Nations that once aligned with the U.S. out of financial necessity would begin to balance between blocs, trading with the West, but settling with the East. Security partnerships would be reassessed. Economic loyalty would no longer be guaranteed by the dollar system. This is how a world order changes, not with a declaration, not with a treaty, but with infrastructure, currency by currency, payment by payment, reserve by reserve. By 2026, the question may no longer be whether the dollar is losing its monopoly. The question may be how far the transition has already gone, and whether the world has crossed the point of no return. History shows that no global system lasts forever. The British pound once ruled world trade. Before that, it was the Dutch guilder. Before that, the Spanish silver empire. Each currency fell not because it collapsed in a single day, but because the world slowly found a new center of gravity. The US dollar now stands at a similar crossroads. The BRICS strategy is not about replacing one empire with another overnight. It is about creating a world where no single nation can control trade, reserves, and finance with one currency. A multipolar financial order, multiple settlement systems, multiple reserve assets, multiple centers of power. And in such a world, the privilege America has enjoyed for decades, the ability to borrow endlessly, sanction freely, and project power through its currency, would begin to fade. The danger is not just economic. When financial dominance weakens, political stability is tested, social divisions deepen, global influence is questioned, and strategic decisions become more aggressive, because declining powers rarely step back quietly. The real question is not whether the dollar will face competition. That is already happening. The real question is, how will the United States respond when its greatest weapon, its currency, no longer commands the world by default? Will it adapt and share power? Will it attempt to defend its position through pressure and confrontation? Or will the world enter a period of financial Cold War, where currencies, trade routes, and resources become the new front lines? One thing is certain: the battle for the future of money is no longer theoretical. It is unfolding right now, in central bank vaults, in energy contracts, in digital payment systems, and in geopolitical alliances. The dollar is being challenged, not by one nation, but by a system. And systems, once they reach a certain scale, are very hard to stop. This is not the end of the story. It is the beginning of a new chapter in the history of global power. A chapter that will decide who controls trade, who controls capital, and who controls the rules of the world economy. If you want to understand how money shapes empires, how currencies rise and fall, and how hidden financial wars decide the future of nations, subscribe to Financial Power History. Because the next global conflict may not start with missiles, it may start with a currency.